aspects of private market are well covered. Like PE, we know has historically outperformed listed equities, and there are other asset classes in there where crypto as well has has performed pretty well. Talk us through the defensive characteristics.
Well, I think one of the biggest characteristics is that these assets aren't daily traded. So unlike your listed equities and your fixed interest that operate on an exchange during periods of stress, people tend to, run for the exit. The benefit around, private markets is depending on the asset class and depending on the individual fund as well, because some of these funds will operate, if we're talking private credit, for example, some of them will operate as a bit of a hybrid. So to allow a better liquidity profile, they'll have some public market exposures in there and they blend that with private market exposures. Like I said, gives them better liquidity, but that also means that their portfolios will trade differently compared to a manager that's purely private only. But then it comes down to the individual asset class as well within private markets. So if you look at private equity, for example, during those periods of stress and how they need to report on their assets, they actually look at listed markets. And when they're valuing their companies, they have to strike a fair value. So they look at the listed equivalent within the particular sector that their individual portfolio companies are operating in. So when, if we're looking at, say, 2020, when listed equity markets sold off, call it 20, 30%, private equity was down about 10 to 15% over that period of time.
Right.